Good day. It's 12 o'clock here, Central Standard Time, and we're going to be talking today about money ripples. Keep that cash flowing. So just got on here today, and my friend Chris Miles will be showing up shortly. I believe he's in the green room enjoying some of our digital hors d'oeuvres we've got, low-cal digital appetizers. So I'm going to go knock on the door and see if he's ready. 1 second. Hang on a second here. Chris, good morning, good afternoon, or wherever you are.
Sorry, I cleaned off the hors d'oeuvres off my beard here.
They're great, aren't they?
They're absolutely fantastic. Virtual hors d'oeuvres. You got to love them.
Well, where do you live? You live in Frisco, do you?
I live in Utah.
Utah, that's close.
Close. Yeah. It's just down the street from Texas, right?
Yeah, I've been there. That's beautiful country down there. I took a drive down there where they got that big hill, and there's a gas station at the top, and there's a gas station at the bottom, and it's a full tank of gas to get between them.
That's about right. Yep.
Yeah, how's you been? We haven't talked for a year or two or three or four.
Yeah, it's been a little while, hasn't it?
Absolutely. A lot has changed, COVID.
Absolutely. It's a whole new world now, right? Like, the world's so much friendlier to everybody now. Like now we don't want to even touch each other, or, we don't even want to like talk to each other. It's crazy,
Very much so. It has really made a very interesting impact with how people interact with the social media stuff. People are doing all this bullying and craziness and weird stuff.
Oh,
and
yeah.
then in person, people, you go walking down the sidewalk and they do this because they don't want to get COVID or something, or kind of weird.
Exactly.
But the internet is still around, isn't it?
It sure is. Yep. It hasn't broken yet, even though Facebook might die.
It had a little glitch. Did you have any withdrawals from that?
I actually had no clue it even happened. I generally only check social media like in the morning and at night, when I'm done. But in the middle of the day, I can't let it interrupt my work, or I just get distracted. So
I spend a lot of time on
post
there.
about it.
So I was in it, but I didn't really suffer or anything. I've got a lot of automated postcards from the United States Postal Service doing the work for me. So it is what it is.
Yeah.
So what are some new developments you've got with money ripples?
That's right. Keep that cash flowing, right? Or as I like to say, cash flow equals freedom, because you got to have more freedom. You got to have that cash flow coming in. And
well, that's why they call it currency.
Yep. That's
flows.
Right. You got to have that flow. You can't break that current or it doesn't work anymore. It's broken, right? And
I heard somebody say once that a lot of people, their dream is to go on vacation and not have to work. They can go on vacation. And the person said that actually your money is on vacation. It's sitting in the bank and it's not working.
Oh yeah. I'd say the biggest development that's not really being talked about as much lately over the last, year and a half plus, right, has really been the fact that people have got a lot of either really their money's in prison is how I put it, right? That money's locked up in prison. It's either locked up in people's 401ks, it's sitting there, or it's sitting in a savings account doing nothing. It's sitting in equity in your home because now we're seeing our house prices going up to all-time highs now, right? And most people haven't figured out how to capitalize it. And in some ways that's good. In some ways that's bad. Good because if you have no clue what you're doing, that's a good thing. It's better not to gamble with your money, right? Because the last thing I want to hear people say is like, oh, I took all my money out of my home and put it into Bitcoin, because that's just stupid. Like, great. If you want to have Bitcoin, I've got Bitcoin, right? But don't gamble your security away into something like that, because that's just super speculative, no real intrinsic value for that matter. It's no better than US dollar, so don't go try to gamble your money away. But if you can get your money to work in a way that creates passive income, each and every month, quarter, year, whatever it might be, but regular stable income, especially when so many people had job scares just a year and a half ago, right? When things were shut down because it was a non-essential business, right? You remember that? I mean, that should have been a huge wake-up call, like a nice little, warning bell, a nice little alarm that said, listen, this is your drill to get ready. This is your drill to actually start getting multiple streams of income so that you're not relying on that one stream in case the government says, hey, you're no longer needed, right? And I think that's the biggest thing we need to be going for right now is how do we get those multiple streams of passive income and get our money working for us so we don't have to keep working so hard for money?
Well, for those that don't know, Chris's website is moneyripples.com. That's his how you get a hold of Chris, for those that don't know. But I know because I've talked with Chris before. And I find it fascinating that, I guess not, Jim Rohn used to say turn frustration into fascination. So I'm fascinated that some people don't at least have a side hustle. Granted, you might have your job and you like the security of your job. At least create a fishing blog and put some affiliate links on there of fishing tackle. And then when you go fishing on the weekend, do a little blog post. Try and get something going on the other side so that if that job goes away and evaporates, like your gig at the restaurant or whatever, and COVID knocked you off the planet, you have something going on. So I think it's good to diversify a little bit. Granted, people want to stay focused, but you put all your eggs in one basket, believe it or not, your job can go away.
Absolutely. Yeah, that when people are saying, hey, let me throw more money in my 401k, right? Which one, you're gambling in the stock market. That's a gamble. By the way, the stock market is not only is it just about an all-time high, right? Even though it's been kind of capping out lately. The problem with the stock market is that we've had 12 years up, really going into that, really the 13th year of an uptrend in the stock market. That has never, ever happened in history where we've seen 13 years up every year in a row consecutively, right? And not only that, it's more than double the average of what the market usually does. So we're already way overvalued on the stock market side. People are throwing all this, their freedom away into a 401k that's locked up that you can't touch without getting permission from mom and dad, which is the US government or your employer or both. And the problem with that is, like you said, what if you diversify? What if you start a fishing blog and you're saying, I don't have the cash for it? Yeah, you do. You've been throwing that stupid money in that 401k and now it's gone. You can't touch it unless you get fired, lose your job, or quit. So the best thing you can do is stop putting money there, put money and invest in yourself. Stop investing in everybody else's companies, which they don't care about. They don't give you the time of day. Invest in your own business, invest in your own company, invest in your own investing so that you have control of your money and your freedom and your time.
So I'm invested in REITs, real estate investment trusts. What are your thoughts on REITs? I like it because the portfolio that I'm in is commercial, residential, and vacation homes, retirement homes, hotels, shopping malls, and storage lockers. So if times are good, you get a vacation home. Times are bad, you get a storage locker. So it's kind of more stable than 8-track tapes.
It can be, yeah, especially compared to 8-track tapes. I think I had a few of those locked up in an attic somewhere, but maybe they'll be worth something someday. You never know. But REITs are kind of, they're really kind of a phony version of real estate, right? They're the paper asset version of it. So you don't really have the recourse that you have if you actually own a property. The easy thing is, at least it's easy to get in and out of them, right? It's not like buying a property and they have to find a seller or a buyer for your property to get out of it. REITs are way easier, way more liquid to get in and out of. The only thing is that understand that these companies are buying these properties in the portfolio. Don't give a crap about what price they pay, because there are a ton of money managers out there right now buying up properties at overvalue. They're paying over appraised value because they can, because they've got cash. They're like, what do we do with it? People keep giving us cash. All right, let's go buy this piece of crap property, even though it may not cash flow. But hey, we're in it for the long haul, right? So it doesn't matter. So that's why you get usually worse returns in a REIT than you'll even get buying your own real estate. Plus, when you buy real estate, you get all the tax advantages with it too. And the great thing is you don't have to deal with toilets, tenants, and trash, right? Like when I buy real estate, I'm buying it turnkey, where I don't even find the property. Somebody else finds the properties. I just have to go and buy it. And then somebody else manages the property. They deal with it. Or I invest where I pool my money with other people, buy into apartment complex, like commercial, like you were saying, right? Or self-storage or other places like that where we can pool our money together. We still get all the tax benefits where we get to basically write off all of our gains, right? We almost get like this tax-free income from it. You don't even have to get a Roth to do this, by the way. Get all this money coming in. But again, higher returns with less risk, because then we become the owners of it. Something goes wrong, we can foreclose, we can call that note due and things of that nature.
That's where I'm reluctant with all that paperwork and understanding all that stuff. That's why I invest in the REITs, because I think
it's easier,
fairly stable. And we've needed real estate and a roof over our heads since we walked out of the cave. So it's Again, more stable than 8-track tapes.
Well, that's why you need education, right? Like, because you
Yeah.
can't let ignorance get in the way of your freedom. Like at some point we got to be able to say, listen, we can make this easier. And it's really not as complex as you think. It's just for most people, the hardest part is thinking differently, thinking that that's even a possibility, right? Or an option in their life.
Well, like some people think that financial freedom is having $1 million. And to me, financial freedom is having $1 over your expenses.
Yeah.
Expenses are covered, and part of your expenses are having some fun. You budget that in. Most people could get by fine with $3,000 or $5,000 a month.
Yeah.
And they're free. But some people don't think that way. They think, how am I ever going to get $1 million? So they end up buying a lottery ticket or going to the casino or something stupid like that. And the odds are against you,
That was my big awakening in 2006. I had been up to that point a mainstream conventional financial advisor for 4 years, right? So I taught everybody to do the same thing. Hey, buy mutual funds, buy REITs, buy this or that. Pretty much everything I sold, I was telling people to buy, right? Which is really what financial advisors do. They're just salesmen in suits, right?
Right.
Again, good hearts. I had the right intentions, but I was trained by financial institutions to sell you the very thing that everybody is sold right now. And that's the thing that's considered common. Don't mistake common or something that's commonplace or conventional as something that's conservative, right? Because I have some people say, well, I'm going the conservative route, so that's why I'm buying these mutual funds. No, that's not conservative. Conservative, I think, is being like less risk, right? That's not conservative. That's comfortable. That's going with the mainstream. And the mainstream is broke right now. So why would we want to go with that method, right? Why would we want to copy people that aren't successful? That doesn't work in business. Why would that work with money? So when we see that happening, it's like, no, you're comfortable because everybody else is doing it, right? So you hope that if the ship goes down, you all just go sinking with it on this Titanic called mutual funds. But the truth is, you can get away from that. That's what I learned in 2006. And like you said, save up $1 million, you'd be rich. My whole goal as a financial advisor when I was in my 20s was to save up $2 million so I can live on like that 2 or 3% a year, about 3%, hopefully. With inflation and everything else. You don't want to go that 4% rule. That is just a joke. When people say 4%, you can live on 4%. No, you cannot. You are not financially independent if you're living on 4% of that money. If you have $1 million, 4% is $40,000 a year. That's too much, especially if you're younger and there's inflation. That's hyperinflation even is a worry, right? So I tell people 2 or 3%. Well, I was hoping, at that time, $2 million back in like the early 2000s, that would be $60,000 a year. Maybe I could live off of. Well, $60,000 a year sounded like a lot back then, $5,000 a month, which in today's dollars is nothing. But I was hoping by the time I was 40, I would have saved up $2 million to then live on less than the interest. But what I learned, and you just addressed this already, is that cash flow, income coming in is what really matters. That's what we're really looking for.
Yeah.
But I realized that same $2 million, if that made a consistent 10% that's paying out, even contractually paying out 10% a year, that's $200,000, not $60,000, $200,000, right? And that's what I'm seeing because I get people all the time. They're like the Dave Ramsey poster child. They paid off all their debt. They've been stuffing their mutual funds, their 401ks, just like he told everybody to be a good boy or a good little girl. Unfortunately, they still come away and say, I'm not financially free yet. I had a guy just a few weeks ago say, hey, I've saved up over $3 million in these mutual funds. And my financial advisor says, good job, keep going. Because his goal is to live on $500,000 a year, right? And so for him to do that, he would have to save up $15 million. So he'd have to quintuple his money, and he's 53 years old. So he's like, well, hopefully the market doesn't tank in the meantime and slow my progress because I got to quintuple my money. So either I got to save a lot, and hopefully by my 60s or 70s, I'll have enough to retire, right? And I was like, that's ridiculous. That same $3 million, we can make you at least 300,000 plus a year. We can get you financially independent at not even independent. He's already financially independent at 200,000 a year. He doesn't even need that much, right? But 500,000 is what he wants for freedom, right? There's financial independence, which is, you said, $1 over that expense that you have. So if you have 8,000 a month in expenses, you need 8,001 to be financially independent. Well, he wanted freedom. He wanted to be able to say, I can do whatever I want. And so I said, hey, we can actually do that within 5 years based on what you've been doing. We just got to get your money working better for you versus gambling it in markets that you have zero control in.
What types of products or services or things do you think are something to invest in? I mean, on a small scale, I'm invested in a piece of software that I pay $50 a month for, and it's got an affiliate program hooked to it. So I get
Yeah.
2, 3 people working it with me. It's cash positive, and I use it to market my business and growing that out.
Mhm.
So are there other products and services and maybe bigger things? Like some people don't realize that there's a whole affiliate marketing thing. You can sell stuff like memberships to private jets.
Yeah.
Those are sizable commissions.
Right. It's true. That's the key thing, I think, is that a lot of times people think investing, they think of only what their money can do, right? But what you're describing is something that's more valuable, which is time and energy. Because time and energy can create an infinite rate of return on your money. You could put little to no money into something and create cash flow. You can create income coming in from that. That's something, again, I learned in 2006 was accidentally I started creating like these referral relationships. I was just doing it because it was creating value for people. But then when someone said, "Hey, I'm willing to pay you a referral fee for that," I'm like, "Really? You would?" Because back in my financial advisor days, I wouldn't split anything. I was too greedy and too concerned with my own self and trying to survive and be paycheck to paycheck than to do that kind of thing. But in an abundant world, really you create win-win-wins for people when you create that kind of JV relationship. So to your point, I think the first place you want to look at is start with what you know. Start with what you understand, right? If there's something you already have connections, if you're already naturally referring people, you should be looking at affiliate or JV type of things that you can get compensated for doing that, where you don't have to deliver the service or the product, but you could be the connector, right?
Yeah.
So if you're naturally a good connector, look that way. If you naturally find yourself gravitating towards tech, great. Do some things in the tech world because that's not me. I have to hire tech people to do that stuff for me, right? Do that. Like go with where your strengths are. But remember, that is still an active business. Even if it can be I call it residual income, right? When it comes in without you having to work for it all the time, that's residual when it comes through business. But it's still in some cases, it could be active income. Remember this, if you're going to be earning a lot of active income, don't just stop at saying you're successful making millions a year with your active income. That's not success. The real success is if that active income stops, you're still okay. Do you still have streams of income coming in, right? This is why I get network marketers all the time, because they're always like, "Oh, that company's going to be there forever." Like, let's be honest. Even if that company's there forever, you may not be with that company forever. And what if you have to rebuild that network marketing or direct sales business all over again? I had a family member in his 60s, made millions and millions of dollars in that business. And yet he ended up having to launch a brand new one because the company kicked them out. Because they just said, "Hey, there's some drama that you're dealing with. We don't want to be a part of it." And they booted him out of his business, gave it to somebody else with no payment, no recourse or anything. And he couldn't do anything about it without, hiring attorneys into the hundreds of thousands of dollars, which he didn't have anymore because they cut off his commissions.
That whole network that he built up, that family that he created, went to someone else, just like that. A bunch of
gone.
Bunch of orphans, bunch of adopted networkers.
Yep. And now he's 68 years old. And what does he say is his regret is he said, "I've made literally millions and millions of dollars in network marketing. And what do I have to show for it? Nothing." He's like, "I built these businesses and for what?" He didn't take any of that money and use that money to create other streams of passive income outside of his business, right? So that's the thing is start with your business. That's your economic engine. Go there and what's easy, but then start to expand outside of it. And that's where I start to look at things like real estate, right? And it doesn't have to just be real estate. I mean, I have, connection with people that do like oil and mineral rights, and they pay good double-digit returns on that. We've got, things in like, you could actually buy a franchise. You can actually invest in a franchise and work part-time in that kind of business and get all the write-offs too, right? Even like I mentioned syndications or funds, where again, you put the money in, but you deal with none of the hassle, right? But you can get sometimes a lot of the tax benefits too. So you're taking more of that money and keeping more of that income versus paying it to taxes. I actually still like buying properties, although again, I like to buy managed properties that I don't have to manage myself, right? And I don't buy anything in the Western half of the United States. Like here in Utah, no way. I just had somebody yesterday I talked to, they had 2 properties here in Utah. I said, if you're willing to part with those properties and put them elsewhere, like out in the Southeast or the Midwest of the United States, we could actually more than double your cash flow, which would actually get her to be financially independent overnight. Right. But the income she had coming in was like, yeah, it's getting me close, but not quite. It's like, well, you're losing out on another $6,000 a month that you could be having versus the 6,000 you're currently making. She could actually go up to 12,000 a month of passive income with the assets she had, with no extra money out of pocket. But again, it's all about trying to find and unlock that money, that equity, or that cash that you have that's not working for you as hard as it should be.
I've got a project that I'm working on. COVID slowed it down for sure. It's an event center in Costa Rica.
Interesting.
And the idea behind it is people come and they use this event center. So investors could invest in one of the villas, sort of like a timeshare, but not really a timeshare. It's more of an investment share. They could invest sort of like the Monopoly game. You know, you got a hotel and a motel, and when people land on it, you get paid.
Yeah.
So when someone comes down there and does like a yoga retreat and they got to book out those 30 villas, that investor can earn from that week that they were spending there, that weekend. Right. And then the next event comes in. And then there would be one little space where they could rent it themselves and stay there for a week.
Yeah, exactly.
So it's a cool idea that we're putting in. It's right in the jungle. And
it's just thinking outside the box, right? It's just getting outside of that dumb old box and thinking that stocks and mutual funds are the way to go. And they're just not. They're high risk, mediocre returns, you know, where you could do the opposite.
It's a thing that people are familiar with.
Yeah, they're familiar with it, but it doesn't mean they're taking higher risk. Or it doesn't mean they're taking lower risk. They're taking higher risk to get lame returns for the most part.
There's all those teeny little fees and things that you don't use. Like, it's a 1.5%, no big deal. Yeah, but that's 1.5% 40 times.
Compounded, which is much bigger than even just 40 times, right?
The compounding thing can grow faster. It can also ungrow.
Oh yeah, absolutely. It's like disinvesting, you know, like even when you lose money, when you have a 1.5% coming out after losing it. And that's the thing you have to understand, is that whenever you lose money, you don't want to be in that place, right? I always try to go for things that are very certain, right? That I've got, you know, some actual value there. Where with the markets and things like that, that's why I don't like trading the markets anymore, even though I used to all the time and taught people how to do it. The thing is, they're all arbitrary numbers. There's no real validity behind them, right? And so, like, if you lose 10%, you can't. A 10% return on that money after you've lost 10% does not get you back to zero,
right?
Because when you lose 10%, say you go from $100,000 down to 90,000, 10% will only get you up to 99,000. Right? Because you made 9,000 off of 90,000.
Yeah.
You need 11.1%.
When you're climbing the hill and you slide down the hill, you got to use energy to get back to where you were.
Much more than going down. Yeah. So you lose 20%, you need 25%. You lose 33%, you need to make 50%. You lose 50%, you got to make 100% return. This is why you see financial advisors all the time showing charts that always include the Great Depression, right? They always show you from the 1920s, right before the Great Depression, and that pops back up. And then they tell you what the average return is, right? Because the average return looks better than the actual returns. Because just like this, if you lost 50% in a year, that's minus 50. And then let's say you did get back to zero. So you got a plus 100%, right? Minus 50 plus 100 is 50. Divided by 2 years is a 25% average per year. And a lot of people don't realize that when financial advisors and companies tell you the average returns, they're not giving you the actual yield. They're giving you kind of a half truth. They're giving you something. They're not technically lying. That's why they can get away with it. But those average returns don't mean actual yield. This is why people were saying in 2015, I had a lot of clients saying, you know, it's weird. It's 2015. They say I've averaged 4% a year with 2 recessions that hit, right? Y2K and then the Great Recession. But I have less money than when I started in 2000. You know, how am I having a 4% return, but still be just under what I started with? Easy.
Well, those
the average.
Those averages and all that and percentages can be deceiving. Like my brother used to say, if 50% of the traffic accidents are caused by drunk drivers, and you removed all of the drunk drivers from the freeway, 100% of the accidents would be caused by sober drivers.
That's right. Figures don't lie, but liars figure, right?
Yeah, it all boils down to how much did I make? How much did you keep currency flowing? That's hey, we got a friend of mine tuned in here, Mike Wilkie. Hey, Mike, how you doing?
Good to see you, Mike.
Mike Wilkie is a cartoonist magician friend of mine. So there's an example.
Wow.
He makes money drawing cartoons.
That's incredible. See, that's something that I had the artist, you know, in my family and everything, but then I buried that talent and now I can barely do a stick figure.
That's an interesting area. If a person wants to get that passive income going, there's another friend of mine. His son is doing really good with YouTube videos. Granted,
Yeah.
he's buying all those eggs in that YouTube basket. So if it goes
Mhm.
away, but he's basically just creating cartoons digitally on a computer and then he puts his voice to it. And it's just stupid stuff like My Two Sisters.
Uh-huh.
And people are watching it. And he's getting millions of views and he's
Yep.
earning that income. So if you can have that going on and then something else going on, or figure out how to repurpose that stuff so it creates another revenue stream,
Mhm.
it's kind of endless. And I think a lot of people don't think that. Again, they think
Yeah.
myopically and the scarcity thing. I can't put all my time into this. I work 8 hours a day.
It's true.
You're not always working. You're sometimes screwing around, and you should be screwing
Yeah.
around and make money doing it.
It's true. Like I didn't even realize all the streams of income I could be creating. I have about 16 different multiple streams of income, 2 of which are active. The other 14 are passive or residual, right? One of those was when I started to realize that my own podcast started getting more and more listeners, more and more followers and things like that. Then all of a sudden the checks started coming in from the advertisements that happen on the different media channels. And I thought, wait, I've heard of people doing this, but I never actually seen it myself. And even if it started out at, $20, it took a couple months to get $20. Still, I thought that's incredible, and now I'm seeing several hundred a month coming from those same things, even sometimes in the thousands from just that kind of stuff. And so it's true. There are so many ways to create streams of income, especially through business, right? And that's why I always tell people, they're like, what do you think are the best areas to invest in? And I always come back to them like, it's business and real estate. Like if you look at the 4 asset classes, right? There's 4 of them. There's, the paper assets that everybody tells you to invest in because that's what they're selling you, right? That's the stocks, bonds, mutual funds, savings, all that kind of stuff, right? Annuities. That's all paper assets. Even Bitcoin is a paper asset. Then you've got commodities, which is like the real tangible gold, silver, oil, corn, whatever you want to call it, right?
Yeah.
And then you got things like business, and then you got real estate. And my 2 favorite are by far business and real estate, because those are the ones that have the best tax breaks. And I think that some of the best potential returns and controls that you could put in place to ensure that you keep getting returns.
Now, when you say investing in business, are you talking about like any kind of business in general?
It can be. Yeah,
like
absolutely.
software perhaps, or
absolutely. It could be even an element within your business, right?
So you're sort of investing in commerce. There's all this money that's flowing. You just reach in and grab some of it.
That's right.
And real estate is similar because we need a roof over our head, so it's fairly stable.
Yeah.
Whereas if you go into trendy kind of stuff, like I don't know where Bitcoin's going to go, but it was just Bitcoin. Then all of a sudden, Dogecoin and Ethereum and all these other things.
Yep.
There's going to be. So, yeah, absolutely. I don't know about investing in that kind of stuff. Investing money in money to hope. It's like these marketers selling marketing training to other marketers so they can sell marketing training to other marketers.
It's like a brand new coach is telling coaches how to coach, right?
There's a lot of that going down, and I don't like
that. Well, and that was my problem with Bitcoin in 2009 and 2010 when it was introduced to me. Back when it was a penny, right? People would say, "Well, here's why," because we're gonna basically, put our finger in our nose, kind of thumb at them and say, "Hey, we're gonna create our own thing. We don't like the U.S. dollar, so we're gonna create this." I'm like, but it's not backed by anything. You're just creating the same thing, and it's funny because that argument still happens today, even with like, Warren Buffett and Charlie Munger, they obviously hate it to death. Even the Fed presidents say the same exact thing today, but it doesn't matter because it's not about what's backing up. It's about what people value it to be, right?
I was just watching a video the other day, I think yesterday, of this guy. There's a cashier, and the guy was going to pay with Bitcoin, and he says, "So how much is that?" And the cashier tells him the price, and the guy's thinking about it. All of a sudden, the price goes up. The guy's thinking about it again, and then the price goes way down. Maybe the price went back up again.
It's hard when something's not stabilized yet, right? Now, don't get me wrong. Like there's the arguments about that. Like I like to separate them because people will talk about the with going digital, like digital currencies, dealing with the blockchain, right? I'm not arguing that blockchain and digital currencies aren't a thing, and aren't going to be I think they're going to be a thing that continues. The thing that I disagree with is don't rely on something like Bitcoin, because my same argument from 2009 was what's going to stop the government from stopping it, or the governments of the world coming in saying, boom, China already did it. And now they're trying to stop all the mining, right? So they're trying to like hinder all that because it's not green enough,
Or start their
term.
own and then overshadow it.
Yeah.
Do that too.
There's just so much uncertainty with that. Like you don't want to gamble your own future. Now, like I said, I bought some Bitcoin, right? Way back when it was like $6,000,
Yeah, why not taste it? Right.
Yeah. So I've made money. And by the way, I pulled out all the money that I put into it and then some. I took like a 20% return plus my principal. I left the rest of it to gamble. So I'm like, hey, if it goes back down to $10,000, cool. I might leave it in. I might sell it. It's not going to hurt me because I've already made my money off of it and I'm out. I learned that from my stock trading days when I used to do that. It was, take your profits and run, and when I know it's that much of a gamble, it's like, great, I'm going to let it ride, see if it does hit $500,000. Great. Awesome. I love it. But again, that's a teeny percentage of my whole wealth, right? It's just such a small thing that even if it were to go away, completely go to zero, it's not going to make a difference in my life. Like
you already got your thing back.
Yeah. But,
well,
there's so many people gambling on it right now.
We've gone for about 30 minutes here, so I want to close this up. But it was fun chatting with you. These are very interesting concepts, and it's always fascinating to me. Money is nothing but a byproduct of energy, and you just got to put it out there and make it monetized. And the internet is flowing all the time. You just got to figure out how to capture it. That's all.
That's right. There's the whole thing you got to do is just keep focused on how you create value for other people. How do I create the win-win? How do I solve problems and serve people? And I guarantee finances will not be an issue, right? Money will always continue coming in as long as you have that service mindset of trying to solve problems and serve people.
Well, I'm going to put you into the green room for some more of those digital appetizers back there. And there's also a big chest back there that's full of digital money, Bitcoin. Go ahead and grab as much as you want, stuff your pockets. And I will jump into the green room and have a chat with you before I sign it off. But I'm going to close this one off, Chris. Appreciate you.
Thanks, Brad.
Let me put that little, where did it go? The little money ripples. There it is. That's the guy right there. Thanks, Chris.
Thank you.
Well, that was fun. Money ripples right there. And what the heck? Why not white water? More than ripples. Get it flowing. So I interviewed Chris a long time ago, and now we did it again. This is kind of fun, and times have changed, but not really. It's a matter of just investing in the right things. So that's all I got for you. Peace, love, and happiness. This is Magic Brad signing off. Enjoy the rest of your day. Be good. Be kind. Be nice.